The concept of Elliott's wave, establishes that every market makes a 5 impulse wave, 1, 2, 3, 4, 5, and after which it corrects itself like A, B, C, and once that is done, it continues moving again, 1, 2, 3, 4, 5. So at this point now, we're expecting the market to, complete this wave like 1, 2, 3, 4, 5 before we now see a bigger corrective structure here. All right, so now let's dive into this. Let's zoom in and see what exactly the market is doing here, and see how we'll be able to take a trade from lower time frame at this point. Okay, so from the 1 hour time frame, we can see here that the market has given us an impulse, a correction in terms of kind of a running flat, another impulse, a correction, another running flat, and then another impulse. So which completes 1, 2, 3, 4, 5. So here now we are seeing a potential setup, and this setup, is kind of another running flat, but in a downtrend. Okay, so what should we be expecting is that once this wave is over, we're expecting the market to drop. How fast this is going to drop, will be based on some factors that I might not see now, but we'll be expecting this market to drop. So as a trader, what you'll be expecting to do is for you to position yourself, at this point, you position yourself, because here now the market is making a flat that might be, so at the break of this, you're expected to take a short trade downwards. Now, if you take a fib here, we measure this, take this fib here and take it there. So at least the first take profit should be at 2396. Okay, 2396, the first take profit. Then if the market still want to push downwards, most times gold will just do what it got to do. So you can take a fib from here to, from the beginning of this move and to the end of the move, and let's see, at least 50% of that. So that will also be another place to monitor. So watch out for 2364, 2364. So these are the two places that we are hoping, this might come to. But the first take profit most times we always, smashed out within a few hours once this trade is confirmed. So what we are waiting for now at this point, if I should go to 15 minutes, is for us to see a setup that we understand. Remember, our take profit for this potential short position is here and here. All right. So, but at this moment, what we are looking at for is to see if this move is over. If this move is over, so we have seen an impulse, a correction, an impulse, a correction, an impulse. Okay, so is this move over? Well, I don't think so. What we might be expecting is that you see a bigger correction and then one more push up. Okay, because the first one seems to be like a leading diagonal. Okay, and once a leading diagonal starts a point, we're expecting a correct three-wave correction, then that will be the play out. So probably tomorrow this will happen, or early tomorrow morning we're expecting this massive drop. So for today, you should just be expecting the market to see how it complete this three-wave move before it goes on. Now, understanding waves is very, very important, because we can see over and over again how the market plays out. We see here, we took this trade here because we know that this is an impulse, this is a correction. Took this one, this is another impulse, this is a correction. We took this one here, this is an impulse, this is a correction. We took this trade downwards. So yesterday we took here, this is an impulse, this is a correction. So using waves theory to understand financial market, especially gold, is an edge, because it helps you to trade patterns, and this pattern keep occurring, over and over again in the market. Now, if I should take you backward, you will see a lot of these setups that we traded, because we are trading this based on a recognized pattern that I have seen in the market. You can see here, this was a running flat that was traded on Friday. Actually this one also on Friday. We have an impulse, we have a 3-wave move corrective structure here, and that was a completed move. We traded it. We have an impulse, we have a correction, and we trade it. So the summary of trading this is so simple. We look for an impulse, we wait for a correction, and we take the next impulse. We look for an impulse, we wait for a correction, and we take the next impulse. Okay, so these are the patterns we look out for. We look out for what happens here, we look out for what happens here, and that is our trade. Once you understand that pattern, you can bear me witness that what happened here is exactly what happened here. All right, so it's the same thing. That's a regular flat. So you can see, once you're able to know this, you start looking out for this in all your setup, and you'll be amazed how this plays out. Now this is for the downtrend. You can see the same thing happening here. Impulse, correction, impulse. I'm showing this free of charge because I want you to succeed this year in your trading career. Now if you want to master this craft, if you want to have a deep dive into this Elliott wave analysis of a thing to trade any financial market, kindly chat me up using the detail below, and I'll be glad to take you by hand and show you how you can fine-tune this strategy to suit your personality, so you'll be able to be more right than wrong. Remember, our trade setup for the week will be at the completion of this running flats. We're expecting the market to drop. But depends on when you'll be watching it. You can check out exactly if it plays out this way. So thank you for your time, and don't forget to smash the like button and subscribe to this channel. Share this video with somebody else, and they will thank you in return for that. Thank you.